What's up, guys? Welcome to the first episode of Star Podcast. Today we're gonna be talking about a bunch of stuff when it comes to real estate, so that you guys can stay informed and become real estate rock stars. Joining me once again is Chris New. Well, joining again for the first time on the podcast.
What's up, guys?
That's what he means.
There it is. Cordero normally knows me as "Who are you again?" or in this case, the
"Hey you guy."
"Hey you guy," or the what'd you call me recently? Just the bearded.
Oh, the bearded parasite.
Yeah, the bearded
world domination guy. Yeah, exactly. Well, you had this glorious beard that was going on, and I'm trying to I have this story where I remember I was 27 years old. For all you people out there, I'm an old man. I'm 35, no, 34 now. But I was 27. I was looking in the mirror as I was shaving, and I was like, man, I have these patchy things going on, and I was like, man, I can't wait until I grow up and I can grow out a full beard. And then I was like, wait a minute.
15 years later.
I'm 27 years old. I'm done growing. It's over. It's
quite
done.
literally.
Yeah. So
So I do have a very full beard. And actually coming up here very shortly is November, No Shave November. And that's where on October 31st, I'll shave one last time, and I'll let it grow out until about end of March.
Yeah, I just keep my beard. I like to keep it short.
Maintained.
Yeah, maintained.
Well, I'm not going to let it be a burly bush. I think when I see guys like that, I'm just like, man, you belong in Alaska frontier.
Yeah.
Now I keep it trimmed, maintained. I guess, what do you call it? One of those dapper guys.
Oh, the dapper, yeah.
They have the hair up in a bun, hipster. Would you
Yeah.
like me to pour you a cocktail? Particularly the old
No, I wish I could grow out a full beard. Unfortunately, I'm one of those.
You can, but you would look like Keanu Reeves with just.
That's a good analogy. I will look like Keanu Reeves with the patchiness going on, and I have this. I have the reverse of a handlebar mustache. I don't there's these corners of my lips where it doesn't grow. And so I have mutton chops, they stop there, then they connect at the chin, and my mustache is completely hovering.
You'd be like a 1800 musketeer, D'Artagnan if you shaved your face and you just left the mustache and goatee. It's oh.
I try. See, I can't grow a goatee out because it doesn't connect, and that's.
Well, I'm saying just from the lip part,
I see what you're
little
saying.
bit of a patch from the bottom of the lip going in. Just a small one, and then you have a burly mustache. Yeah. I bet you had a mustache when you were little or younger.
I did. I was my brother had a mustache at age 8.
What the
I had a mustache at 9, 10, around that time. So I remember in being in
puberty.
Yeah, exactly. Being in 5th grade, everybody was like, "Oh my God, Mike, you have a mustache." And I was like, "Yeah, check this out. It's cool." And then when I was in middle school, I was finally getting my chin hairs, but I had 3 of them. And I remember this girl, she's sitting across from me, we were talking, and she goes, "Would you cut those things already? Because they're super long and disgusting looking."
Would you cut those things?
Yeah, so
everyone was looking at you because they hated it.
Yeah, exactly.
Look at this weird guy. How old are you? I'm younger than you, actually.
You ever see that subreddit that goes 13 or 30? It tries to figure out people's ages.
Oh, yeah.
It shows this little kid. He look you can't even tell if he's 13 years old or he's 30, but he's straight up smoking a cigarette. And he's I don't even know.
It's Russian or something?
No, it's not even Russia. It's Thailand or something like this, and you can't even tell.
Yeah, you have a hard time telling.
Yeah, so he's all over the place. Or he's just sitting there chilling, and he looks like a little tiny cop. So he's just how old is this kid? So
I'll pull you over.
Yeah, exactly. But yeah, going into the whole stories, what we're talking about today, we just recorded 4 videos going over the market report, talking about what's going on in the housing market. And I don't know about you, but I keep getting the same questions from a lot of people who are, they're interested in possibly buying a house, but they don't know where it's going to go. And the common thing that pops up is, well, Mike, if I buy a house now, is the market going to tank on me? Am I going to be in a situation where I'm going to be upside down in my mortgage or something of that nature? And it's a real fear that a lot of people have, and I think it's wrong. I think if you're looking to buy a house, buy a house. Yeah. But if you're looking at it for a financial investment, you're gonna flip it on stuff or you're gonna hold it and you're just purely gonna make money off of it.
You should be concerned.
Yeah, you should probably
an investor.
Yeah, you should probably be concerned.
But what I have to say to that would be, everyone's afraid of this word recession, but if you look at, so essentially what I gotta say to it is that the term recession, I think, scares a lot of people in the wrong way.
Yeah.
Because by definition, the recession should be 2 or 3 consecutive quarters in a year of a lower production than you normally were. So I could just have a flat year, a flat 3 months, or sorry, 6 to 9 months out of the year, and it's considered a recession. So we're not going to see like 2006 to 2010 by any means.
But that's the fear.
That is the fear.
You know, and not just the fear, but like it's also the, you know, some people are just like, oh man, I can't wait till those days come back. And I'm like, yeah, I get that. I understand those are good times. Those are Black
That's
Friday
a Black
deals.
Friday deals. Yeah, for investors all day.
For investors all day and stuff. But like a lot of people think those are going to come back. And I'm like, look, the same situation that was involved in, 2006, 2008, during the housing crisis. That's not what's happening now. That's not what's driving up home prices now.
And lenders and buyers, lenders, title companies, everyone's under scrutiny from that time. So mortgage rates, if you're buying right now, your mortgage rate's going to be between, on average, what we reported today was 3.68%.
Yeah.
So if the economy does go down a little bit, you're still paying a 3.68% interest rate. You're not going to balloon on you. It's not going to be a jumbo loan. It's going to be a regular conventional FHA loan.
And I think people don't realize that, like, when the market starts to take a tank, typically interest rates go up. You know, so now you have opportunity to get into the house that you want and pay a lot less for the mortgage. You know, so, you know, like, yeah, it's kind of like either you pay a lot for the house or you get a higher mortgage, what's going to balance out at the end of the day. You know, so you have to do the math. But like, I don't think we're going to get into that situation in 2008.
It's
not.
It's not. And the thing is, like, whenever there's an election cycle,
yeah.
everyone kind of pauses and be like, what's going to happen?
Yeah,
nothing's going to happen.
Is the White House going to be blue? Is it going to be red? What's going to go happen? What's going to happen?
Yeah, it's regardless of the election, if you plan on living in the home for more than 5 years, you're going to be fine. And it's like we're at the end of a bull market, and it's going to be like a rock skipping on water. It's like right now the rock is about to come back down towards the water, and then it's going to hit, and then it's going right back up. The moment that rock sinks below the water surface, that's when you're going to have 2006, 2008 again, all right?
Yeah. But even then, like when it did go to that level, we relatively pulled out of it. Yeah, so we relatively pulled out of that situation. You know, and a lot of people will sit there and be like, oh, it was thanks to the, you know, the quick acting, you know, of the federal government and all stuff like this. And I disagree. Like, I think the government
wholeheartedly,
the government was good on the propagandists, and it was their state. You know, they even used the slogan of, you know, we're here to save Main Street.
Oh, Wall Street?
No, Main Street. They're talking about Main Street, like people who, you know, they're talking about the average American.
Oh,
you know, they're like, we're bailing out the banks, we're bailing out Wall Street so we can save Main Street. And they don't realize that during that time, the vast majority of people who were defaulting on their mortgages and things of that nature were investors. Like the vast majority of people who owned back then, they may be upside down now. You know, when it comes to like selling, I come across a lot of people who are like, yeah, I'm looking to sell, you know, but I bought at the height of the market and now I owe more than what the house is worth.
Right.
But they still have the house.
Yeah.
You know, they're just, when you look on paper, you know, they owe more money, et cetera, blah, blah, than it's actually worth. But the vast majority of Main Street wasn't defaulting on their loans. It was investors going like, you know what, I'm not going to make a profit on this. I'm going to get out of here.
Right.
You know, like, I don't know how many times like huge commercial developments owned by huge banks purposely were like, well, we're going to default. You know, like, we don't care.
Yeah.
Because it didn't make economic sense to them.
No, it doesn't. And all it does is hurt them.
Well, it doesn't hurt them at all because they don't care.
No?
They can sit there and, like, with the big banks, they're going to sit there and get refinanced with some other deal and stuff. They all survived and all got bailed out. They don't have, like, a credit. Like, they don't have, like, a FICO score like we do.
Yeah.
You know, so when it comes to big commercial banks and stuff like this, you know, you could sit there all day and be like, yeah, CEO of X bank that defaulted on huge commercial deals. Why'd you do that? Oh, because we weren't going to make a profit and we had to keep the company solvent. Okay, that's cool. Here's another loan.
Yeah,
you know, like
as long as they can explain it, it makes sense on paper, and it's gonna like, all right, here you go.
Yeah, exactly. So makes sense. Yeah, who was suffering was the smaller investor. Yep. You know, who were like, you know, those stories of people who were buying houses and they quit their job, and they were buying houses and they were taking equity lines of credit out and living just off of that. And they were just like, hey, when it comes time to pay back these loans, I'm just going to sell the house because the house is going to appreciate up to there.
And hopefully just be able to pay it off.
And just keep doing this over and over again. There was one guy on like 2020 who was like, you know, like, I'll never have to work again. I'll just keep doing this over and over. And those are the people who got screwed over. And now they want to be part of the main street. They're like sliding in like, oh my God, we got hurt too. And it's like, no,
Do you mind like bailing us out here? No jail time, please.
Yeah, exactly. You were gambling and your gamble didn't pay off. You didn't expect that that all of this easy liquidity that was coming in for the Federal Reserve was going to be an issue, that these liar loans were going to be an issue. Like, it was a systemic thing, from easy credit from the Federal Reserve, from mortgage companies being pushed, from the GCEs. This is the government-sponsored enterprises like Fannie Mae, Freddie Mac, all these people who were all part of this thing of like home ownership. Homes never go down; they just keep going up.
Yeah, they're going to. Come on.
So yeah, no, we're not going to get into that situation again.
No, not by a long shot.
The main reasons why home prices are climbing at the rate that they're climbing is demand. In particular, in Central Florida, where we're located, the demand for housing is so strong, but we have like a 2.6 month supply, which means like if in 2.6 months, if we don't add any more homes to the
if everyone stops selling today, the amount of homes and at the assumption rate or the consumption rate, whichever would be, is that it will only last 2.6 months.
Yeah, and we'd be completely done, completely out. Yep. So, like it's developers, they're not keeping up with the demand. People,
they can't.
Yeah, people who are under like we just talked about, people who are who have mortgages that are worth more than their houses, they're not selling. So the traditional of like, if it wasn't for the 2008 crisis, we would have more houses on the property, but people can't sell because they owe more, so they're not going to cover that bill. So people are holding on to the properties longer. Yeah,
people are holding on to the properties longer because they're trying to make some kind of money back on it for a lot of those people. The sheer volume of people on an annual basis that are moving to Central Florida. There's roughly 60,000 people move to Central Florida every year, and then Central Florida population is just over 2 million, with a 1 to 3% who attempt to move per year. That's over 100,000 people trying to move, and there's only a supply of 7,000 homes.
Yeah, 7,000 homes, and then that's the reason why like rental prices in Central Florida are climbing.
So you're seeing results, and not results, but a lot of articles on social media just blasting affordable housing, like trying to come up with a solution. The only solution to combat affordable housing is to build more houses.
Exactly.
The only solution. You can't put caps on rentals. You can't put caps on home prices.
Yeah, and that's another
build
thing.
more homes.
Yeah, California passed. I think California and Oregon passed a state. I think California did too recently.
Did
they passed a statewide rental cap. And my thing is with the rental cap is if you want to limit the supply, drive up the cost, and destroy renters' lives, put a cap on it. Like literally, like that's how you do it. Like the complete opposite of what you should do. You should put a cap on like the luxury market and keep the low income market completely unregulated, and more houses would or more apartments would be built. But the fact that they're putting a cap on this, and I think in California it's like a 5% annual raise, like you can't go above that. People don't realize this, but that's how you got slumlords. When you're like, especially in New York is notorious for the whole like idea of rental caps. You have this building. And, my family's guilty of this too. My grandma was living in the same apartment building for like 30-something years. Her rent was like $700 like 5 years ago, in New York, in the Bronx. So, like, when you make no money off your rental unit, then you spend no money on fixing anything, so you become a slumlord. What's the point of me fixing all this stuff when I don't have the money to actually cover it?
Right.
And these buildings aren't cheap. They're not expensive. They have maintenance issues. They need servicing.
And you're not having the best tenants who are reporting appropriately that there's an issue. So it's a compound effect, and it's not just one thing. It is a variable of things that just hurt everything. And actually, Central Florida is, I think, within the top 5. If not within the top 3, highest demand for multifamily in development.
Yeah.
So apartment buildings, communities such as Baldwin Park, Avalon.
Yeah.
Where they have their own little private niche communities where like the first floor will be, I guess, kind of like downtown style.
Yeah,
it'll be commercial and everything else above it. So like Soto, we're in the Orlando area, everyone. So that right there is becoming the highest demand.
Yeah.
And there's another place right there on, it's called Ivanhoe at the Yard.
Mm-hmm.
So Lake Ivanhoe right off, you can see the building being built. It's right off of Virginia Avenue, right there in the Mills area.
Yeah.
So that's another one that's being built right there.
Yeah, I mean, like if you want to get if you want to provide housing, affordable housing, you like having a rental cap is like the worst way to go about that.
I wholeheartedly agree.
Yeah, you're gonna destroy that entire market.
Let me say this again. The only way to combat affordable housing is to build more housing.
Yeah, build more houses. That's it. And higher density housing. Like I think like
higher density per square foot.
Yeah, well, not just yeah, exactly. Like
it's usually per acre or per square foot.
Multi-unit apartment buildings, condos, townhomes, and I get it. I hear it all the time from my clients. They absolutely hate those buildings. Like in the College Park area, which is like a relatively like hipster-ish, really nice area, they will go in there and buy like these old homes that were probably 900 square feet, but they are like sitting on like a quarter to like a half acre of land, like a huge plot of land. And they'll buy those houses. They'll, for $300,000, buy the land, tear down the house completely, and build like a quadplex on it. And like these really fancy, ritzy like quadplexes on it, and they'll sell them for like $500,000 for each one.
And it's happening all over Winter Park.
All over Winter Park. But the thing is, people hate it because they're like, "Oh, I don't want to be up my neighbor's butt." But I'm just like, that's what we need.
Yeah.
Like we don't need to build more 900 square foot homes on quarter acres of land. And let's be real. Like, talk to most millennials. When you go home, you're not chilling in the backyard hanging out. You're
not in Florida.
No, you're going home. You're snuggling on your couch in front of Netflix, surfing through it for like 30 minutes, trying to figure out what you want to watch. As soon as you find it, then you're on your phone flipping through Reddit or Facebook.
Yeah. He just explained every day in the life of Cordero.
Exactly. But that's what the vast majority of people are doing, and they want to sit there and be like, "Oh, I want a big."
No one goes out in Florida.
I want a big backyard, all stuff this, and like I don't want to smell my neighbor's fart. But it's like then you don't want to pay for that land because that's what's happening. And like Avalon Park, Baldwin Park, they are built in a way that I think is sustainable going in the future. And this idea that you have to own land and blah blah, I think is. Sure, if you have the money to do that, go ahead and do it. But I think in the future, it's going to be multi-family units stacked on top of each other.
And that's what Oregon just passed. Because Oregon. Sorry, like going on the Oregon Trail. Oregon had passed a statewide bill that no municipality or town will build a single-family home with a population of 10,000 or more.
So that's pretty much everything, except for like your cousin Eddie who lives out in the sticks.
Quite literally. So statewide ban, there is no more single-family housing in municipalities under 10,000. Over 10,000, excuse me. And, I mean, that's something realistic that a lot of people, maybe a lot of legislators are considering in places where there's a high demand for homes, such as here. And you know what sucks, too, is that the counties have so much restrictions and red tape for people to build. For builders to build.
I think one of the biggest and greatest phenomenons or like trends that are going on right now are the tiny homes.
Yeah, those are cool.
One of the things is that like the regulation, especially here in Orange County, is that you can't build a dwelling that's below like 500 square feet.
Right.
So like most of these tiny homes or tumbleweed homes, whatever you want to call them, they're typically between like 100 to 300 square feet. And that is more than sufficient for like, honestly, like I would love to buy like a tiny home, just get like a piece of like a plot of land, blah, blah. And what's crazy about the regulations is that like you could do that. You could build tiny homes and you can include the square footage. You just got to make sure that all the tiny homes that you build on his land share the same foundation or share the roof.
That would make sense.
So you have to have like a connecting awning between each building.
Or just a bunch of pavers. Like one giant, like in between each tiny home, like would just be like pavers, all kind of like you could walk to each other.
I don't know if it's pavers, but I know they specify.
That's just an idea.
Yeah, it's just an idea. Well, they specify as the foundation. So it's going to be like a 6-inch concrete block that it has to be on. Or what you could do is build these tiny homes and then build like a carport roof that connects to each other, so you can park your car underneath it and you can live in your tiny home and you can get around the regulations. Or we could just get the regulations repealed and not have to go around this weird method.
Yep. I think there are so many ideas and none of them are are going to be the right idea.
Yeah.
Or there's always going to be something that someone can say to an idea that could make sense or just can be completely foobar. But again, just building housing, just continue to build is what needs to be done.
Yeah, and like I said, like nothing's going to be the silver bullet when it comes to the housing issue.
Yeah.
And each community is going to have to decide like how are they going to solve it and what method is going to work best for them.
Right.
Like here in Central Florida, like we're so spread out. You know, one of the things that like really like gets on like especially when you talk to most Central Floridians, they're like, oh, I-4 traffic and a bunch of other stuff. This is because like to get anywhere in Florida requires a car. You know, you cannot like that's why I love like these new communities that are coming up. They call 20-minute communities, where essentially if you live
in walking distance.
Yeah, everything's within 20 minutes of walking distance. You know, and like they have a central hub where like all the commercial like Publix is there, where you can, you know, all the stores. So like you live in as tightly like Baldwin Park is a perfect example of this.
Baldwin Park is amazing example for that. Continue.
Yeah, but I just think that's like the best solution to go forward is building small knit communities like that. Also getting rid of the idea that downtown is this one singular location. Yeah. You know, like Houston, for example, doesn't have any like zoning laws whatsoever. So they literally have like this idea that you can build wherever you want. And so they have like multiple.
That's crazy.
Yeah, they have like multiple like downtowns. There was this case of this house, and I talked about this on like my previous podcast. So if you guys listened to this and you heard the story before, I'm sorry, but
suck it up.
Yeah, suck it up. So like in downtown Houston, there's this house, and it's where the store of Up came from. So they had this guy, and he didn't want to sell his house, and they couldn't do anything about it. And Houston doesn't have zoning laws, so the developers had to build around his house. The only thing is you can still go to like Houston and see that very house, but it's like a tourist destination now.
That is crazy.
But it's like a house in the middle of like skyscrapers. You know,
that is amazing.
Like, imagine going downtown Orlando, you're driving down Orange Avenue, and then like you see building, house, building, house.
Well, there's a couple actual spots in like downtown Orlando, not like where the cities are, but like the skyscrapers. But there's a couple like just random homes in the middle of like. What are you doing here? Like, how are you still here?
Yeah, they just got never bought out, and they probably got grandfathered in or something like that. And the moment they sell it, it has to get rezoned or something like that. But yeah, I think going into like a situation where like we stop trying to funnel all of the whole population of Orlando or any city into one central location.
I agree.
That's what causes all the traffic.
Yeah, like there are so many other surrounding cities that we could literally just be like, all right, start building some skyscrapers or start funneling some money towards them so they can have and build and have some incentives coming in for developers to come in and start building. Winter Haven, Apopka is booming right now for that. So I just don't understand, like, for like government funding or state funding, they go to the biggest municipalities instead of really kind of helping out, trying to expand and make other surrounding cities desirable. Yeah. And I think that's another way to combat affordable housing. Like instead of like giving Orlando $2 million, go ahead and split that, give it $1 million over to someone else who really needs it. Because City of Orlando can fund its own money. They can literally put on fundraisers all year round to generate income, other than just giving people speeding tickets.
Yeah.
And like building tolls to just drive on I-4.
Yeah, all those tolls. Oh, I'm actually for the tolls. Like
not on I-4.
I'm for
it's an interstate road.
See, that's the thing. That's where the issue comes from. Like a lot of people are like, oh, this is interstate road. Taxes pay for this before. Like, yeah, to build it, but ongoing maintenance. Like this is a huge piece of infrastructure that requires maintenance.
It was never supposed to be that though.
Yeah, but that's the thing. The reality is that,
and that's why E-Pass is under like lawsuit. Or is it E-Pass or is it SunPass?
I don't know. But like, here's the thing. Like, I think that the people who use the infrastructure should be the ones who pay it. You know, so like if you're going to be using I-4, then you should pay to have it maintained. And that's just like why sit there and charge people? Because if I know plenty of people who absolutely refuse to use I-4. They would rather slit their own wrist than actually like nope.
Get morbid, bro.
Yeah, no, they don't want to get on I-4 whatsoever. But every time they go to the gas pump, they're paying 25 cents a gallon for that road tax. You know, like, and that's going to the federal government. So it's just like they have to pay it regardless if they use it. Right. So to me, it's just like get rid of the 25-cent tax. We get cheaper fuel, and then put tolls on this, and then like you do price loading. So essentially, like as traffic starts to increase on the road, the toll actually increases in price.
Right, and
so
that's
that keeps
what
people off.
It keeps people off that, but you're gonna get that person who's gonna be willing to pay like $13 to $30 just to get past it all. But the thing is, the roads, I-4 still moves. I drive on it every single day, even with the construction. We're just over halfway now, and I-4 still moves. It's not like gridlock like Richmond, Virginia, or like New York City or LA, or Atlanta, God forbid, like or Atlanta, like Orlando. The I-4 corridor is a mess. Like I don't dispute that whatsoever. It's long overdue for its expansion, but it still moves.
Yeah,
you know. So I'm looking forward to it. And the only reason why I can probably, now that you're mentioning like the whole taxing thing, that it makes sense to charge people to ride it, to use that lane, because pretty much road conditioning and maintenance is already coming out of taxpayer dollars. So the money from that will just help boost the amount of money needed to do maintenance repairs.
Or you could just be like revenue neutral and just have the tolls cover what the taxes covered and get rid of the taxes. Mm-hmm. Which, in me saying that, I'm like slapping myself in the face because I know that's never going to happen. Like no politician in his right mind is going to be like, oh, we're going to get rid of revenue. No, they're going to be like, oh, we have extra revenue. Let's see what we can do with our pet projects on this side.
Right.
So that's going to be the reality. But like, I think Central Florida is going to continuously expand. It's going to grow.
It needs to.
And the issue is that we're going to have infrastructure issues. So the money has to come from somewhere. So I think like having tolls, and then they're only putting the tolls on like the middle lanes. Like they're going to have like speed lanes, and you can use
on the middle lane.
Yeah. You can use the other lanes without paying any tolls at all. So it's only like they're going to call them express lanes. So you hop on the express lane, you start incurring a fee. And I think like you have to get onto the express lane. Like separately.
You can't just like get onto it from wherever you are.
Yeah, exactly. You just can't like pop in and pop out. Like I think there's gonna be like an actual like divider between the two.
Like Atlanta?
Yeah, like Atlanta has the Peach Pass where like essentially like, you get onto the shoulder.
Yep.
I call it the shoulder, but like the very left lane, and you start paying per mile, and it tells you like how much it is per mile and et cetera, blah blah, and I'm all for that. Like I'd rather have that system. So you're just like you're stuck in traffic. Like what? I'll pay the $2 per mile.
Whatever. Like I'm in a rush. I'm trying to go to the hospital.
Yeah, exactly. I want to go home. I'm tired. Because right now, like what I do is I cheat.
Oh.
When I'm heading towards downtown Orlando from Altamont, there's like this shoulder exit, Princeton. You just get off.
I do that too. Yeah. I know what you're talking about. So as soon as it backs up right there at the Fairbanks, you just get off into the exit, and then you just come back on I-4, back off I-4.
Exactly. You just like do this like little loop.
Yeah.
You're like,
dude, I saved like 8 minutes.
Oh, dude, it's crazy, and I guarantee people are catching on.
Oh yeah, it's definitely caught on because as soon as I noticed it, like I was able to fly, and then now in some of those like exits, it kind of backs up a little bit.
Yeah, like, exactly.
Okay, I keep track of like a vehicle. It's like, is this faster now, or is it I being on I-4 faster? I'm like, okay, that's a 7-up truck. Okay, let's go ahead. Am I beating it, or when I get back on I-4, or if they're gonna pass?
I'm always worried it's gonna be like some kind of undercover cop that's gonna be behind me. He's like, this guy's cheating.
Sure, you're using the road wrongfully.
Yeah, exactly. And so like sometimes, like if I see a car and I'm like, is that a cop? I'll get off at the not that exit. I can't think of the exit. It's right before downtown. It's right before the Colonial exit. Ivanhoe, yeah. So I'll get off on the Ivanhoe exit, just go down Orange Avenue.
Orange Avenue, I guess, depending on what time it is, like it's pretty bad. Once you get past, what's that last road? Roslyn? No, not Roslyn. Sorry. Anderson.
Yawn.
Why are you yawning into a microphone, dude?
Yeah, I'm tired.
Unbelievable. So long story short, the market ain't going anywhere.
Yeah, exactly. It's in this.
The market ain't going anywhere. If you're looking to buy a home, buy a home. If you're looking to sell a home, sell your home. If you're looking to invest, be careful.
Yeah, exactly. Okay, so here's my thing. Like people here, like as a realtor, like the idea is that you're supposed to go around promoting the stuff the propaganda that we pay money for the aura or the associations to talk about. And one of the propaganda, the biggest one out there is like buying a home is an investment. When you buy a home, you're building wealth. And it's like to a certain extent, that's true. but to a large extent, it's not. You know, like here's the thing:
Nice.
when you buy a house, if you're buying it just to live in it,
Mm-hmm.
it's a liability. You're paying a monthly mortgage, and money is coming out of your pocket. And if you're just solely relying on appreciation to be your monetary stance, that's not considered an asset. You know, that's just like
It has positive cash flow as an asset.
if you that's the difference. If you buy the house in order to rent it out to have where you're not paying the mortgage, someone else is paying the mortgage, and you're collecting the difference.
Okay.
That's an asset. But
Okay.
if you're buying the house just to buy the house, just to pay a mortgage on
live
it, that's a liability. But here's the thing: this is where the investment comes from on that side. Nothing beats better than having a place that you and your family can call home, that you can set roots down in, that you can live in a neighborhood, be a part of a community, that your kids can go outside and play around in the yard, meet new friends. Think about it like when you're a kid in the neighborhood that you grew up in, like how much of an impact it had on you as a kid. That's where the investment comes from.
Yeah,
It's
long term.
It's the emotional,
and if
it's
you-
the family, you know?
Yeah, and if you live there, you plant roots, you spend the time and the effort, and anytime you're making that mortgage, so in like say 15 years, and you can have some substantial equity in that home.
Yeah, you can build the equity in there, but my thing is like if you do the math and like I like to be realistic with people, like if you had like a house, you paid, you know, $150,000 for it, and you had a 5% interest rate on it. In 30 years, you're gonna pay like another $150,000 in interest.
Right. That's
And
why.
so you would have to sell your house at $300,000 in order to just break
and,
even.
And that's why you got to advocate and you got to be knowledge is like, how can we cut this down? So
Pay
if you
that
do,
bad boy fast.
yeah, you just pay an extra payment and a half. So instead of 12 payments, because there's 12 months out of the year, you pay 13 and a half. So an additional payment and a half extra towards your principal. You turn that 30-year loan into literally a 17-year loan.
Yeah, or you can even now we just pay like an extra loan. You can pay your mortgage every 2 weeks.
Yeah, you can do that too. If you're in the
Yeah.
ability, if you live good enough within your means, you can do that.
Yeah. So like instead of paying monthly, you pay every 2 weeks. And the reason why I say every 2 weeks and not semi-monthly is that some months or months have 5 weeks.
Yep.
So if you calculate it based off of 52 weeks in a year, you can literally dramatically reduce your mortgage down, you know, quite a bit. To the
You know, I
point where
never even thought about that.
Yeah, so
it's 27 and a half payments essentially.
Yeah.
52. Something like that. Oh, 51, sorry.
yeah,
So 21.
was every 2 weeks, so it'd be like
Yeah, 21
yeah, it'd be-
payments essentially.
Yeah, so like you would literally pay your house down a lot faster, but like, you know, that's if you have it within your means. Once again, I would never advocate anybody to buy a house that is beyond their means. Like always, if you're gonna buy a house, make sure you have at least 3 times the amount of the income coming in as what the mortgage is.
Right.
That's like at the minimum.
Right, and like, it's all about living within your means, and a lot of people don't live within their means these days.
That fire life.
Yeah, you got to live that fire life.
Yeah, exactly.
If you don't know what fire is, Cordero, we'll break it down for you in another podcast.
Exactly. We don't have enough time.
Yeah,
right
we don't
now.
have. That's a whole other rabbit hole.
Whole another rabbit hole, and we'll talk about that.
Yeah.
But hey, guys, we appreciate you guys listening to us. If you have any questions about the real estate market or anything related to the real estate market or to Central Florida, or if you just want a best friend and have a good chat, go ahead and hit us up. Leave your comments in the comment section down below, or you can reach out to us directly. My name is Michael Cordero,
My name is Chris Noon.
and I guess that's a wrap.
That's gonna be a wrap. This is our first time, so
Yeah, we'll figure it out. But hey, guys, we appreciate you guys listening in. Have a good day.
peace.